I want to talk today about a Keynes quote that I think is very relevant for what's going on right now in the markets. And I want to connect it to the report for the first half that we just closed and we issued our report. So I want to connect this quote by John Maynard Keynes with the current situation in the markets and try to explain our performance for the first half. This is the Not Even Wrong podcast. It's July 9th, 2020. This is Krim Delco. Today, the market is down about 60 basis points while our fund is up 3.5%. For the year now, we are up 121% while the market is down 2.5%. So if we started the year with $100 and the S&P started the year with $100, we would have now $221 and the S&P would have $97.50. Now let's get to the quote that I want to talk about today. Practical men who believe themselves to be quite exempt from any intellectual influence are usually the slaves of some defunct economist. John Maynard Keynes. So what is he saying here? Practical men who believe themselves to be quite exempt from intellectual influence. So we're talking about people in business on Wall Street, across the world, doing their thing, trying to be productive, making money, doing business, and not really listening too much to intellectuals. And I think what Keynes here really means is economists. And then he says, they are usually, so all these practical people are usually slaves of some defunct economist. My interpretation of this quote is that in the end, the macroeconomy, the big picture stuff, which is driven by economists, politicians, people like the Fed, these kinds of things really decide the fate of most people when it comes to the economy. In other words, when you invest money, when you do business, you go day by day, you think about your business, you do what you need to do, which is covered in microeconomics, theoretically. But then in the end, the big wave, the big stuff which happens at the macro scale determines success or failure most of the time. And this is exactly the kind of time that we are in right now. Here's here's my thoughts. So we started this fund 12 years ago. The purpose of Orange Capital is to generate wealth by investing in technologically driven disruption with large social impact. This is our purpose. And we spend our day thinking about disruption, thinking about businesses and their impact. And we decided over the years to focus on companies like Tesla and the CRISPR companies. We have Microsoft, we have a couple of other positions, but the big position is Tesla, and Tesla contributed pretty much most of the first half performance. So our first half we closed with a 63% performance after fees. So we charge 20% performance fee, so the gross performance was 79%. The bulk of this comes from Tesla. And now why am I starting this episode reviewing our first half performance with a John Maynard Keynes quote when everything we do is about Tesla? Well, here's the thing. We believe that the macro situation, or in plain short, the trillions of dollars that the Fed has added to its balance sheet by buying treasuries since March, that this has been a lot more instrumental in driving asset prices and driving our performance than the actual situations on the ground. Now, this I don't want to take away from the phenomenal successes Tesla is enjoying. They have delivered an amazing amount of cars in a very tough quarter. They're advancing artificial intelligence. They are advancing battery technology. They're penetrating markets. Customer satisfaction is high. This company is really doing very well. But the main performance are 121 year to date and 79% gross for the first half, 63% after fees. These kinds of numbers are amazing for the hedge fund industry, and they come from the macro. They are not driven by individual stock performances. We have delivered 14% to the portfolio through our CRISPR basket. Now, these companies are amazing. CRISPR technology is amazing. But the amount of performance we've been able to deliver in a down market, don't forget the actual S&P 500 is still down for the year, and we've outperformed, even with our CRISPR basket, is mainly driven by the trillions of dollars that the Fed is pumping into the economy. Let me elaborate. There's two vectors, in my opinion, that matter here. One is we have a lot of liquidity in the market, and two, we have zero real interest rates across the yield curve. So this is what Keynes means, which that when you have these kinds of macro moves, trillions of dollars pumped in the market and no interest rates, zero interest rates across the board in real terms. This is priced off the tips. The Treasury, inflation adjusted bonds. So these are real prices. So the real interest rates over 30 years are zero. So what do? You start investing in things like ESG, environmental, social governance. You start looking for growth. You start looking for disruption. Billions of dollars are moving into growth companies, companies with real economic growth. And I've spoken about this in the past. Real economic growth, according to Clayton Christensen, always comes down to disruption. And I'm not sure that the market is explicitly thinking like that, but this is the beauty of financial markets. They don't, this is not one person making decisions. It's the markets, as an intelligence gathering process, are coming up with this idea that if there is no opportunity cost of capital, we might as well go and look for things that are good, i.e. ESG, and things that give us growth, like Tesla. Tesla is not the only company which is profiting from this. There are CRISPR companies, for example, which are in the business of accelerating the advent of some sort of Moore's law in the pharmaceutical industry. Right now, we're in Eroom's law, or so we're the opposite. We spend a lot of money for drug development and we don't have a lot of results. So we want to change that, and by introducing disruptive technologies like CRISPR and enabling massive increase in drug development with lower cost, I think we are at the cusp of maybe getting to something like Moore's law in pharmaceuticals. This is what the CRISPR companies, that's the purpose of our investment. That's what they're doing. I think Tesla's purpose is to accelerate the advent of sustainable energy and autonomy. And it's also the purpose of Elon Musk is to have an interplanetary society, which is mainly driven, of course, by SpaceX. But I still think that those two purposes are kind of intertwined. So if you don't have opportunity cost of capital today, if you get nothing, if you invest in treasury bonds, then the inclination by the market is to start taking risk elsewhere. And the risk with companies like Tesla, although high, is still worth it because the growth is amazing. In a zero real interest rate environment, you have the potential to compound 30-40%. That's what Elon Musk has been saying, not guiding, but saying that is something that with zero real interest rates is becoming much more enticing. So to come back to Keynes, what he's saying in his quote is that, look, we appreciate practical men. We need them. We need people to build Golden Gate bridges, develop battery technology, build companies, all that stuff. But in the end, we all become slaves of some defunct economist. Now, of course, this is a bit cynical. What he means is that, the people in the Fed, by rescuing the economy from the COVID-19 crisis impact, have put enormous amounts of liquidity in the market. And I think what's happening is what I call collateral repair. So it's the inverse of collateral damage, that you have this amazing move into environmental, social governance type companies like Tesla, which are doing good things for the world, at least for the near term. We'll see how that pans out once they become trillion-dollar companies. But right now, I think it's a good guess to say that they're doing good things. They're taking us away from fossil fuels. They're forcing the other car companies, which were complacent, to finally do something about electricity and sustainability. They're introducing artificial intelligence into the car. And I think as that also, the car is the killer app for AI, meaning that it's going to proliferate in other areas and has a very high chance to become sentient, so that we have a lot more advancements in AI, which then can also get us advancements in manufacturing, and that can become a flywheel of growth that is very, very enticing. So this trillion-dollar rescue package by the Fed, which certainly wasn't intended to put money into stocks like Tesla, nevertheless is indirectly moving lots of capital into these types of stocks, and that has been the main contributor to our amazing performance for the first half. Thank you.